Welcome to Animal Spirits with Michael and Ben. About a week ago, I sent out a tweet, and I just said, what happens if people get these $2,000 checks, and everyone gets vaccinated, and we have a spending boom, and for some reason, we don't see a meaningful uptick in inflation. So we had these trillions of dollars that got thrust into the economy, and we don't get that other side of the risk of inflation. Do we just give higher checks to next recession? Does the government think they can spend more? What is the endpoint if inflation is not the risk?
Throw out the economic textbooks.
Basically, honestly, 90% of what I learned in economics classes in college has been debunked in the last 12 years. Anyway, that's another topic. And every time I send a comment like this out or I blog about it, someone will write, you don't really think that inflation is as low as they report, do you? They assume the government figures are completely understated and then the true cost of inflation must be higher. Because have you been to the grocery store lately? The price of beef has been going up for the past 3 years. And people have this availability bias where something that easily comes to mind that they pay attention to, they think that must be how the whole world works. And then they have these other things that they don't think about that technology is completely eating away from deflation.
We have a bit of availability bias here too, because this is a great topic and we can't not talk about it, but think about all the people that don't tweet this nonsense to you.
True.
Right? It's a very small percentage of the people, but it's such an outrageously ludicrous mindset that it has to be debunked.
Yes. And to be fair, the economy and inflation, these are very complex topics, but the people who say this, they have 100% certainty in what they're saying. Instead of saying like, maybe this topic is more complex than I think. So there was this tweet from a few days ago, said the Chaplet Index is really interesting. I'd never heard of this before, and it got debunked immediately, but it suggests that the true cost of living in America has been going up 10 to 12% per year rather than the 2% implied by CPI. And the greatest thing I think about finance Twitter is that there is always a smart person who has done the work and supplies the evidence and debunks theories like this that don't make sense.
Mm-hmm.
And so people did this immediately. And the easiest retort was, well, first of all, the person who made this up is a charlatan, and the methodology behind it is not useful at all. Second of all, if inflation is running at 10 to 12% per year, that means we've been living through a depression, meaning the economy has completely crashed and our well-being has just gotten decimated in the past decade, which, look around you, that hasn't exactly happened. Alternatively, that would also mean, or the government has been underreporting nominal GDP growth, which is hilarious. Why would the government ever say that nominal GDP growth has been lower than it has? Because if you look back at the 70s, there was, real wage growth or real GDP growth was relatively higher than it is today. It was like 4% per year, but nominal growth was huge because the inflation rate was 7% per year. But wages grew like 150% in the 70s versus the 2010s, it was 50%. And so you picked that data up in the 70s when we had this inflation.
There's things that we can measure. Home prices, wages.
Yes, exactly. And so to the home price one, this was interesting. So this is from Jake at Economic, who is a serial mythbuster. He always backs it up with data. I asked him for this. He was going to update it, but this is through 2019. He said housing affordability, as defined by the average real monthly mortgage payment on a new home, has been pretty steady for 50 years, going back to the 70s. Meanwhile, the average new home is 70% larger from the one in 1971, despite smaller households. So he looked at, if you account for lower interest rates and the inflation over time, the mortgage payment has basically been steady for 50 years for the average median home. Obviously, people are going to say, well, I live in California and housing prices are higher. But of course, this is why inflation is hard for people to wrap their head around, because it's an average, right? And so certain things have gotten worse. Certain things have gotten, have been deflated from technology. But when you really start looking through this, all the things you don't see. So I sent you this video from Russ Roberts, and it's called The Numbers Game, Let's Party Like It's 1973. And he looks at how things have changed in inflation since 1973. And he actually comes to the conclusion that we've been over-reporting inflation. That it's actually not as bad as it seems. So he says prices are 5 times higher today based on CPI. But how do you measure the quality of goods and services improving? Think about the 80-inch TV you have on your wall.
Right.
How much higher quality that is, the amount of channels you get. I scrolled through HBO Max this weekend. So for the price of one DVD per month, $14.99 for HBO Max, you get like 2,000 TV shows and movies.
How much was Blockbuster If we're just going to pick random shit and use this as evidence, how much was a VHS at Blockbuster back in the day? $6, $7?
Right. So there's so many things. I mean, think about all the music you get from Apple or Spotify or Amazon for what, $9.99 a month or $14.99
But
a month.
Go back to the home thing. We have home data, good
Right.
home data, and how much more luxurious and spacious are houses today than they were in the 1970s and the 1960s.
But this is the other thing that people say, and the thing that irks me about this is just the amount of certainty people have in these inflation numbers when they say that they're reported, because they say, well, we have asset price inflation, which I think is the calling card of a charlatan. I think there's a 0.98% correlation between people who say asset price inflation and someone who's been wrong about the markets or economy.
Let me ask you a question: Is there earnings per share inflation as well?
So here's the other one. So honestly, like the HBO Max and music stuff, for us, that's anecdotal, just like the grocery store stuff, to be fair. But the Bloomberg Commodity Index, these are actual inputs that are used.
Alleged.
It is below 1991 levels, and it's down 70% since 2007. These are actual inputs that are used in the production of goods.
To be fair, we have to talk briefly about the two areas of the market or the economy where we're seeing rampant price rises. One is in higher education, and two is in healthcare.
Yes, healthcare is honestly the one where
healthcare is the worst.
If you've had that, like that could be a personal hyperinflation for you, depending. And I think that's another reason why it's so hard, because you could have a personal situation where your spending has gone up and other people's has gone down. So here's the other one. Now I want to kind of debunk the college education one. So I started reading, and just minorly based on the sticker price, I started reading the new Ron Lieber book. He was nice enough to send us an early copy.
The Price You Pay for College. It's coming out later this month. I already know where you're going with this, I think.
Okay, so this stat, I had never heard this before. So you started reading this book?
89%?
No, so he said, what is the if you're going to a private college versus the sticker price that they show, like what it is, in 2019 to 2020, the average discount paid to go to a private college. Do you remember what the number is? Did you get there that far yet?
23,000?
No, so the discount,
the discount,
as a percentage.
What was it?
53%. The average discount someone at a private college pays is 53% versus the sticker price.
This was so I'm early, but this is the stat that stuck out to me. 89% of students at private colleges get a needs-based or merit-based or merit aid discount. 89% don't pay the sticker price.
Again, and the average discount is 53%.
The sticker price inflation is absurd.
So he goes through some of the reasoning behind this. It doesn't really make sense why they do it this way, but for some reason they do, and then they pay, maybe for like international students, pay the full price, and then they end up footing the bill for people, and people with wealthy parents pay more. But it's
actually, so I am going to finish my piece about this week, I think. But last week we mentioned that I was looking at these numbers because somebody asked if I want to pay the full freight for my kids, what do we need to save? And college, which is up there with the most ridiculous price increases we've seen over the last few decades, has gone up, I think, 5% or so a year. So
right, and that's really high.
This Chapwood index that's claiming 10 to 12%. What is it claiming? I mean, absurd.
Yeah, it makes no sense. My other favorite one, the anecdotal one, is, you've probably seen this. It's a 1991 Radio Shack ad, and it's people have shown this, and it's got a viral social media post before. It's everything on this Radio Shack ad can be put into an iPhone now. So it's a computer, a mobile phone, an AM/FM clock radio, a pocket calculator, a compact disc player, a phone, all this stuff, camcorder, all this stuff that would have cost in 1991 like $4,000 can now be done on an iPhone.
I mean,
how do you measure that?
This is nonsense tinfoil hat shit. You could say that you think that CPI is not a great gauge, that whatever, PCE is not the greatest gauge, whatever you're looking at. But to suggest that we're living through hyperinflation and we don't know about it or something, what planet are you living on?
And the fact that wage growth wouldn't be keeping up with that if that was the case. Because again, that happened in the 70s.
The thing that just really bugs the shit out of me is that Bitcoin is the answer. I mean, isn't that what all this is driving at? And so Joe Weisenthal had a post this morning, and I've said this, comparing Bitcoin to a religion. And in fact, that's a big part of why I'm bullish, right? Like, I want to get long irrational exuberance.
I look at Bitcoin as a call option on human nature.
These people,
that's my entire thesis for it.
It is a religion. They're never ever selling. It's much like Tesla. Joe said it has a prophet, Satoshi, who not only has been identified, but who has apparently departed the world. Bitcoin's first block was called the Genesis block. Bitcoin has a sacred text, the white paper. Bitcoin has original saints and apostles. There's holidays every May 22nd. Bitcoiners remember a famous transaction where someone spent 10,000 Bitcoin on 2 pizzas. Meanwhile, every 4 years, Bitcoiners celebrate the halving. So the answer to this asset price inflation, the stealth hyperinflation, whatever, is to buy Bitcoin. Give me a break. Just stop.
On Joe's Odd Lots podcast with Tracy Alloway, they had this Michael Saylor guy who's the CEO of, what's the company he's the CEO of? A big company, MicroStrategy.
Yeah.
Is that it? And he was talking about the fact that his reason for owning Bitcoin was because the Fed has devalued the dollar by 50% in the last 60 months, which is completely false. There's no way that the dollar's because
what's he looking at? Money supply?
Money supply. So he said that the dollar has been devalued. I think this is the thing that gets people mad about the crypto space is that there are people who have been right for the wrong reason. The dollar has not been devalued by 50%. In fact, if you look across against other currencies, the dollar has been strengthening for 10 or 12 years. It's one of the reasons that international stocks have done so poorly if you're a U.S. investor. And so I think that's one of the hard things to wrap your head around this thing is that there are people who are right about Bitcoin because the price is rising, but they're right for the wrong reason. But again, this is one of the reasons that I think you and I own it. And we don't own it enough to make it life-changing. So people have been asking us.
Actually, you and I were talking about this. So I own about 0.8 of a coin. So do the math. It's not a giant number. And I wish that I did this as a trade. I wish that I put more money into this because if I bought Bitcoin as a trade, I certainly would have sold it by now. But I just don't own enough, so it doesn't do anything.
So you put a blog post out saying how you're not selling it. This was what 10 days ago when the price was
all the way back at 24,000.
The funny thing, so we did a podcast with Zach Prince of BlockFi Thanksgiving weekend. Was it Thanksgiving week? So 6 weeks ago, maybe 5 weeks ago. And I think the price was around 17,000 then. And we were worried, like, oh boy, can you imagine if we put this podcast out and then Bitcoin tops? And it's doubled since then. But this is the one asset where it strangely the price goes up and it makes more sense. For like the long-term nature of it, obviously crypto's gonna crash again. I don't know when, but it's obviously it's going to. But
again, the reason why I'm bullish, it's very simple. These people are never selling. It like truly, right? I mean, they're never selling. It doesn't matter if Bitcoin goes to 100 or 200,000. They're never selling. And the big institutional investors, it seems like it's not even the first inning. They haven't even started.
No, it's still all retail and tech libertarians.
By the way, do you think there was any correlation with the $600 checks hitting and Bitcoin going parabolic?
Isn't that a little too easy?
But it kind of did.
It could. Yeah, that could be it, I guess.
Anyway, it's painful to be long an asset class where the people that are its biggest proponents, you've like have a visceral reaction to and disagree with, but here we are.
So didn't you send me a piece this weekend that the SoftBank guy is putting a bunch of money in?
Oh, no, that was a joke.
Oh.
I was joking.
Okay.
I said the reason why I was going parabolic, I was joking, is because it looks like Satoshi's buying again.
Okay,
not Satoshi.
But would it surprise you if 2 or 3 big, deep-pocketed institutions are putting money in here and that's driving the price higher? Would that really shock you?
No.
Okay, and honestly, even though the price move it still doesn't feel as silly as 2017. I'm sticking by that. Even though the price moves have been crazy, it still doesn't feel like that level of craziness and euphoria. Maybe because there's so much else going on in the world right now that not as many people can pay attention to it.
All right, moving on. So Value Stock Geek showed a table, the number of stocks with an enterprise value to EBIT less than 5. And I wish I reached out and asked what exactly is in this. So in 2020, there were 78 of them in the beginning of the year. They underperformed the S&P 500 by 25%. In 2019, they underperformed by 18%. Of course, these are different stocks every year. In 2018, they underperformed by, looks like 6%. And in 2017, they underperformed by 15%. So deep value has gotten its teeth kicked in. I mean, there's no other way to describe it.
I mean, so this data goes back to 1999. And you can see from 2000 to 2010, basically.
Crushed.
it just killed everything. So, I mean, is it kind of fair to think that this is the meanest of reversions? So I looked at this last week. I told you this. I'd never, for some reason, just never looked at this. So the NASDAQ 100 has outperformed the S&P 10 out of the past 11 years, and by an average of about 7% per year. A huge, huge amount, which is kind of hard to do because the S&P has outperformed everything else, basically.
Yeah.
But the NASDAQ from 2000 to 2009 was down 50%. So from 2000 to 2020, they're basically even. So you almost had this mean reversion that people forgot that the tech stocks got crushed for 10 years. And I know it seems silly, but is this just value was just way too strong and growth was way too weak, and now we've had a comeuppance, and now we're back to even? I mean, pick the start and end date, and you can mess with this stuff. But that over the last 20 years, they're about the same, and we've just had two periods where value outperformed by a ton for a decade, and now growth has done the same thing.
So JP Morgan's Guide to the Markets is out, and they did some interesting stuff on value that I've never seen. They looked at the share of a value index with a beta greater than 1. This is the Russell 1000 value, which some people quibble with, whatever, get over it. And it is rocketing up to 59, nearly 60% of value stocks have a beta higher than 1. I thought this was kind of interesting. And it looks like it's been on the rise for the past few years or decades.
So what's my takeaway supposed to be here?
Not sure, just that value stocks are more volatile than you would probably think.
Okay. Yeah, which makes sense because they've been volatile in the wrong direction as of late.
Next chart, they showed the S&P 500 valuation dispersion. This is really interesting. They showed the value spread of the 20th and 80th percentile of S&P 500 stocks. I don't know what they're using. What does it say here? They're using the PE. And it is wider than it's been going back to 96. This includes the dot-com bubble, of course.
By the way, this is the reason that it's always and never a stock picker's market. Because I remember back in the days of my money manager days where they would always talk about why it's a bad environment for stock picking, and they would use dispersion because the dispersion used to be a lot tighter. This is back in, 2010, 2011, 2012-ish. And you can see it is a lot tighter then. And they said if dispersion widens out, it'll be much easier to be a stock picker. And we've had that, and guess what? It didn't matter because if you weren't in the tech stocks, you got killed. So it's just, right, it's always and never a stock picker's market. It's just pick your poison.
Some other charts that are good. So they show the PE ratio of the top 10 stocks and the remaining 490. So we've got 33 times for the top 10. It's a lot.
I still can't believe, though, small caps outperformed the S&P in 2020.
I know, that's a while.
How many people would know? So I think the Russell was up 20%. It was up 100% from the bottom. And I think the S&P was up 18 and change. So small cap stocks, even though everyone said it was only 5 stocks carrying the market higher, outperformed the large cap stocks in 2020.